All right. Right now we're going to look at the ES, also called the S&P, and this is our weekend market analysis. So basically on the weekends, we need to clear off the entire chart. I suggest erasing absolutely everything. Come down here to your trash can, click on that. You'll see mine says remove zero drawings. I've already done that. Yours will say remove X amount of drawings. Just click that, just take them all off. Why do I recommend that versus leaving a few things on? You don't really need to leave a bunch of stuff on your charts to trade. We only need to look for an outer uptrend line, an outer downtrend line, and then three zones, basically an upper zone, lower zone, and a mid zone. That's all we need to start our week off. So during the week, we're trading on a 3 to 5 minute time frame. So we look at a 4 hour, 1 hour, 15 minute, and then what we do is that's our trend analysis, market analysis. And then from there, we'll be down on a 5 or 3. I don't recommend a 1 unless you're trading news. I used to trade a 15-minute time frame, then drop to a 5 minute because the 15-minute was absolutely boring. And I'd sit through the up and down movements and know that I could be in there getting profit. So I dropped to a 5 minute eventually, and that was a little more exciting for me. It was still 5 minutes, and then eventually dropped to a 3 minute time frame is very comfortable. 5 minute, you're an extra 2 minutes before a candle closes. So to me, you're sitting on your hands there, you're waiting on a candle to close. I'm day trading, so I like to get in, get my profit, get out. I'm not going to cover target as far as your monthly target, but guys, if you're don't let I hate when people say don't focus on the money. That's why you're here. If you're not focused on the money and what you need to lock in per day, you're not doing yourself justice. So don't concentrate on the money, is what I'm going to tell you. Okay. Focus on the money. I need to focus on what I need per day to make a living. I got to put food on the table for me and my family. I have to, pay the bills, the mortgage, the electric, the phones, everything cost money. If I want to eat, I got to make money. How much is that per month to pay your bills? And then if you're looking to replace an income or job, you have 9 to 5. What does that look like? How much is it 4,000 a month, 10, 6? If it's $4,000 a month you need, that's $1,000 a week, which breaks down to $200 a day. If you take two trades and lock in 100 per trade, guess what? Or one trade and lock in 200, you're done. You've locked in as much as if you went out and did your day job. Okay. So for those looking to supplement, that should be your goal. That should be your concentration. Let's start there. Let's start by making that 200, 300, 400 a day modest income so that you can supplement your day job. For those especially looking to get out and consider day trading to be their job, it can be. But as a day trader, guess what? If you're not locking in money, you are not doing a good job. You're not doing your job. As a day trader, it is my job to come into the market and get a chunk of money out of there. That is my one job. That's all I have to do. That should be my focus. Okay. And then we leave runners on in case things keep moving. So what we do is, say you get in with 20 lots, you put on 20 to go short, and let's say it pulls down and you're in a profit position, you could close out 15 of those contracts, move your stop to break even. Those 5 contracts you leave on, we call those runners. That's a bonus trade. That's a bonus part of your trade. It's still considered part of your entry, your original trade of 20 contracts, but we call it a bonus trade. We get what we get on there. As we used to tell the kids, you get what you get, you don't throw a fit. That is our runner. And then what we do is modify our stop based on, if it's in an uptrend, based on lows. We'll adjust our stop on the way up, and on the way down, we'll adjust our stop off of highs. So, but again, we're down on that 3 or 5 minute time frame. So here on the 4 hour clean chart, what I need to do is look and draw a line across the bottom that's going to be an uptrend line. We typically draw one, but we may want to draw two. Just depends on how close the current price is I could see if I draw one from this point to this point, that line's going to end up here somewhere. Well, we're not close to that. Okay. So I may want to look to see if I could draw one, from here to here. And does that come out under that? It doesn't look like it to me. So to me, it looks like we broke that one where we had one here to here. And that's what we had last week. We had one here to here as an uptrend line, and it actually broke through. So you can come down here and pull in some more data. But if I do pull in more candles, I see that we were in a downward move here. So downward move here, turning point, bottom there, upward move is what we're at. So that's what I'm going to call the bottom. That's the bottom of the market right now. So what I'm going to do is come in with my trend line tool, attach it to the bottom of that candle, attach it to this one, and I kind of just try and get them close. And then what I do is I will zip in. And again, we're on a 4-hour time frame. Do I include wicks? 100%. So the only time I don't include wicks on a chart is a 1-minute time frame when I'm scalping. I still include them on a 3 and a 5. The reason why you want to include these on a 4-hour time frame is because the movement, as we zoom in, this wick movement down and up is basically the bullish and bearish side of the market deciding on a price. The bearish side of the market back here, we were pushing down, so the bearish side of the market had control. Gets down here, the bullish side of the market basically saying, nope, we're going to start buying. So the bullish side of the market says, here's a great buying area, buying price for us. So the bullish side of the market steps in and they start heavily buying. And we're talking about the market makers. They start heavily buying. What ends up happening too is as we start moving up and forming higher highs and higher lows, then the sellers over here, the bear side of the market, actually pulling profit, closing out, large orders, large trades. So that's the bottom. We include that wick, and we'll come back in, kind of zip over here, and we're going to move the point here. I kind of zoom in because it gives you easier, you can pull it right to there and snap it to there. So what we want to do is go back and kind of go over and look when we see we're way up above that. So I'm going to draw this line just so you guys can see of where, if you draw from this low here and bring it up to that point, and we'll kind of go in, make sure I got it on that low. I do. And then we'll bring it over here, kind of zip in on this, and we'll pull it down here so you can see where we're at right now in relation to that. I need to color these both as uptrend lines. So we'll come in and just mark them. We got a template that you can make a template up in there in TradingView, and just click the template, uptrend, and bam, there's the line. So the reason why I wanted to draw that one is show you that we are past that point. So we can leave that trend line on our chart because we had a brief movement down through it on a 4-hour time frame. If you look in and we hone in and look more on the moves, basically just wicked through, candle here, this short candle here, actually closed right up on that line, bullish right off and up, and then we had another push up, and then it kind of pushed through here, and then we've had another push. So I could see it pulling back to that area. So we're going to actually leave that uptrend line, but our ultimate target, if this starts dropping, is going to be down here. If you want to remind yourself, you can draw a box down here, circle, whatever you want to do. But ultimately, if we see lower lows, lower highs on this 4-hour time frame, we're going to see it drop to that area. Now, what I also like to do is zones. You can call these supply and demand zones, support and resistance zones. There are several different terms used for them. They're high and lows. Basically, we're out on a 4-hour time frame. I know that the market's going to do 3 things come next week on the S&P and on every instrument we trade. It's going to move sideways and up and down. And do I know exactly which way it's going to go? No, I don't. So what we do is we're out here doing charting analysis to look and see what we can put on the chart, what we can notice on the chart in its past movements on the way up here, looking at high and low swings. And we want to use that to our advantage and mark those for future, basically using previous support and resistance or previous highs and lows over here to become previous support and support and resistance now on the move we're having now. So right now we're in a big bullish move. What I need is three zones. I like to draw three. I only need two. I need an upper zone above it where price is, a lower zone below it, and if it starts moving up, we're looking for it to pull to that zone. If it starts moving down, well, it's moving toward a zone. So, and then I like to draw mid-level. So what I'm going to do is I'm going to go ahead and knock the top zone out first. This was our highest point right now. And there's a wick. Again, we use the wicks. So I'm going to come in with the zone tool, and I'm just going to mark that in there, and we're going to call this a sell zone. If it pulls back up there, we're not going to immediately sell, guys. If it pulls up here, I don't just hit the sell button. I don't close out my long and hit the sell button or hit the reverse button, because we would have a runner on. We're going to get in if it pulls through this trend line and pulls back up here and bounces, well, and we're in, let's say we get in long, we're going to hold our runner, and sometimes they break through the zones. So if it breaks through a zone, we have a runner on. So if it comes up and hits this, and we see it start to push through the zone, we're holding a runner. It may come up, test that, and then go on. So what we do is hold the runner. Now, if we start seeing, and we're going to see higher highs, higher lows if it moves up, what we see is you'll see things start to round over. And if it rounds over, then we'll see a lower low, lower high. Well, then we're getting a change in direction, change in structure, change in character. Use those three terms interchangeably. I don't care what people call it, but they call it a change in structure, a change in character. It's the same thing. It's a change in direction. We're starting to see a change in direction to a bearish market. Okay. So again, I know there's a lot of people out there doing videos. They're using different terms. Back when I started trading, there was no such thing as change of character. There was no such thing as change of structure. It was a change in direction. Okay. So the terms have changed over the years, but it still means the same thing. Okay. So that's my sell zone. Now I need to find a location below it. But before I do, I mentioned I like to draw that mid zone. So we could see this push down right on the trend line. You can see it push here just below the trend line. So I noticed that this low is around this low. So what I'm going to do is go to the lowest wick, which is this one, and come back to the first body. So if I hit this wick and go to this body, I could see that if I hit this wick and go to this is my lowest body here, this red one. So what I'll do is come in, and I'll start at that wick there, and then I'll pull it over here to this body. And that is going to be a mid zone. So mark that as your mid zone on a 4-hour time frame. So I could completely 100% see it turning and pulling back to that. We had a huge downward move. That was non-farm. Okay. And then it pushed on down below. So non-farm pushed it down right to that previous low, and then it just kept on pushing. So we had it push through this basically support level and broke through that. So it did not hold up as support during non-farm. Do you expect that it would during a non-farm event? No. You don't know what's going to happen during non-farm. So you have to just take it. So we pushed through, and it never really pulled back to test it on this higher time frame. We'll see a wick here. So down on a lower time frame, what it looks like is we had a push below, and then it pushed back up. That's on lower time frame, and then just turned and kept going down. So I could 100% again see this pulling back up to that zone and testing that zone as now resistance. It was support over here, previous support becoming future resistance. So I could completely see it pulling. So if it pulls up and we start see it rounding over, and again, it's going to make higher highs, higher lows. If we start seeing lower highs, lower lows, it's rounding over. Guess what? We're getting a change in direction. You know, again, change in character, change in structure, because the structure's different. That's what it means. We're making higher highs, higher lows. Well, now the structure's changed, making lower lows, lower highs. So again, you can use those interchangeably. I just normally say change in direction. And the reason why, um, a lot of people don't know what you mean when you say, well, there's a change in character. Well, what does that mean? What kind of character are we talking about? Change in structure. Well, what does that mean? They have to dive in, look more. If I say change in direction, guess what? If it's in an upward move and I say, hey, we're going to change in direction, I bet you 100% of the people that watch the video will know exactly what that means. Oh, change in direction. Wait, it was going up. He must mean that it's going down now, which it's forming lower lows, lower highs, change in direction. So that's just the term I use. It's easy for everybody to understand. So I try and keep it simple and easy. So that's going to be my mid zone. Now we're going to come back out and I'm going to look at this low here and see if that could be a valid low for our buy zone or support level. So again, call it support level buy zone. We got to draw it from the wick bottom to the top. It's a big wide zone. I don't like it when they're that wide, but we're going to just label this a buy zone. Again, it's a support zone. It's a buy zone. We're going to pull back in the chart. We're going to look to see where we're at. So right now I could see, okay, we have more room to move down to that support level. Okay. So right now we're in a downward momentum. And then we would go out to a 60-minute time frame and a 15-minute time frame to see what those charts look like. And is it, as it's forming this, this pullback here, what does that look like on the lower time frame? And then we're down on a 3 or 5 to jump in. We would still be thinking short unless we get that, new higher lows and higher highs. So that's going to be my zone, my buy zone or support zone. If it comes down to that and starts turning, okay, starts rounding over, turning, and then, we're going to be making lower lows, lower highs. If it starts rounding over, turning, we see higher highs, higher lows, boom, we're on a 3-minute, 5-minute, we're taking that entry, we're taking it long, guess where? Right to that mid zone, because that mid zone hasn't even been tested yet. And again, we could see that being tested. So Sunday night, Monday, I could see it just turn and just keep this upward momentum that it has on the 4-minute time frame and pulling up and testing that area. However, it could pull clear down here before it goes back up and test. So we haven't had a good turn at all. We haven't had a good pullback from non-farm in that movement from the rest of the day on Friday. So that's going to be my zone. What do we do if it breaks through the zone? So if it, whatever it does, if it pulls back up, pulls down, whatever, and we see it break through this zone, break this previous support level, well, then I need to come back out to you guessed it, the 4-hour time frame, and I'm going to come down in here. And my ultimate bottom would be in here. And I'll go ahead and draw it. I don't necessarily need to leave it on the chart. It's not into play right now. But you could draw 2 other zones that might act as support. And this one, I would go bottom of that wick over to here, over to that candle body. But those are going to be 2 zones that if it does happen to break through this zone, it might pull down to that. Okay. So I hope you enjoyed. These videos are all about 20 minutes long. And that's kind of our plan. What's it going to do? We don't know. It's going to move sideways or up or down. Now, again, we're going to go out to our 60-minute chart and down to a 15. We're going to see what this movement looks like here. And we're going to draw through trend lines. We don't have a down trend line on the chart, so we could easily draw one off here to this high, and that's where I'm going to leave. Again, we only need one. You only need one down trend line, one up trend line. Don't dirty your charts up with a lot of lines. That's all you need is a downtrend, uptrend. We're leaving this one on. Now, if you want, you could go in and dash this one, and that lets me know that that's an old trend line. Because again, as you jump down to a 3-minute, 5-minute time frame to take your trade, or even a 15-minute, when you jump down to those, these lines that are, because we have this outer one way down here, what happens is these trend lines look flat. Okay, so definitely make them a little thicker, make them solid. Whatever you want to do, you can label them outer, upper, but this is the ultimate target. If we keep dropping, there it is. It's right there, this outer trend line. Hope you enjoyed. Have a safe trading week. I'll talk to you later.